For decades, ARM has been, the silent architect of the mobile world. I mean, their chip designs power pretty much every single smartphone you've ever held in your hand. But now, they're making a massive trillion-dollar pivot. They're done with just selling blueprints. They're about to start building the skyscrapers themselves. And that brings us to a huge question. ARM had one of the most profitable, most perfect business models on the planet. We're talking almost 97% margins. So why would they risk all of that on a brand new, incredibly expensive AGI CPU? That's a processor built specifically for artificial general intelligence. Well, let's dive in. All right, first things first, to really get how big this changes, you have to understand just how perfect their old business model was. For years, ARM was basically operating a near-perfect monopoly. So ARM's genius was its capital-light model, right? They didn't actually make the chips. They just licensed the designs, the intellectual property, to everyone from Apple to Samsung. And what that meant was pure high-margin revenue without the insane expense of building factories.
And this number, this just says it all. 97%. That's the gross margin projected for 2025. I mean, just let that sink in for a second. For every dollar in revenue, 97 cents was gross profit. It was a flawless, honest-to-goodness cash printing machine. So I'll ask it again. Why change a thing?
Well, here it is. This is the core reason for the whole pivot. ARM's leadership saw this multi-trillion-dollar AI tidal wave coming, and they had this terrifying realization. Their safe, comfortable royalty model, it was only capturing pennies of the real value being created. They were leaving an absolute fortune on the table. Okay, so this brings us to the pivot itself. This is where ARM decided to basically rip up its own rulebook and start over. The company is literally transforming its identity. The best way to think about it is this. They're shifting from being the architect who just sells you the blueprints to being the builder who hands you the keys to the finished skyscraper. They're going from intellectual property to actual physical silicon. And the change in the numbers, it's just staggering. The unit economics jump from a few bucks in royalties for a chip to potentially thousands of dollars for a single AI server chip. But here's the trade-off, and it's a huge one. Their almost perfect margins drop down to hardware levels, think 50, 60%. And their partners, companies like Intel, AMD, and the hyperscalers like Amazon and Google, well, now they're direct competitors. The sheer scale of this ambition is just breathtaking. They're not just aiming for a little growth, they are targeting a 6x explosion in revenue from $4 billion to $25 billion by 2031. And get this, $15 billion of that is projected to come from this new AI chip alone. You have to understand, this is an all-in bet on the future. So this pivot doesn't just change ARM's business. No, it throws them onto a completely new battlefield and creates this really fascinating financial paradox. And this slide really lays out the core trade-off perfectly. I mean, think about it. Would you rather have 97% of a small, predictable pie or a 60% slice of a pie that's getting exponentially bigger every single year? ARM is betting everything on that bigger pie. This margin X-curve chart visualizes that paradox perfectly. See, as the gross margin percentage, that's the blue line, comes crashing down from that heavenly 97%, the absolute gross profit in actual dollars, the orange bars, is projected to just explode upwards. They're knowingly sacrificing margin quality for a massive, massive increase in profit quantity. Of course, a move this big comes with huge risks. We're talking massive costs, and now you're in direct competition with your old partners. But, and this is a big but, ARM has a powerful ace up its sleeve, a strategic partnership with Meta. This is the absolute key. See, Meta isn't just a guaranteed first customer. They're a co-developer. They're sharing the risk and the immense R&D burden. This whole co-design process, it not only validates ARM's tech, but it also aims to set a whole new standard for the ecosystem. It's the critical anchor for this entire high-stakes pivot. So, what does Wall Street think about all this? I mean, how do you even value a company that's in the middle of completely rewriting its own DNA? Well, the market's reaction was nothing short of electric. The stock price just surged vertically, and this created a total nightmare for analysts. They couldn't value ARM as a safe, boring software monopoly anymore. They had to completely tear up their old models and re-rate the company, valuing it instead as a high-growth, high-stakes hardware player. So it seems like the final verdict is what you could call a necessary danger. The risks are obvious, right? Huge spending, taking us your partners. But the necessity of the move is even clearer. You just can't afford to sit on the sidelines during the AI gold rush. ARM has traded its safe, quiet moat for a real shot at absolute data center dominance.
Which really leaves us with one final thought. By abandoning one of the world's most perfect business models, ARM is making this incredibly daring, all-in bet on the future of AI. And the question we're all left with is this the smartest and boldest gamble in the tech industry today?
Now, if you want to dig deeper into the numbers behind this whole multi-trillion-dollar gamble, make sure you subscribe to the channel and definitely check out the full breakdown on Stoxcompare.com. And for more explainers on the biggest moves in tech, you should join our Substack newsletter. Thanks for watching.